Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for September 28th, 2018, the last trading day of the third quarter, and wonderfully, it's Friday. So let's take a look at the market here. Yesterday we had an interesting rally, and the reason I say interesting rally is it really was not broad. There wasn't broad support in the rally. We seem to have fewer and fewer companies currently supporting the rally. We're getting high-profile companies are pushing up, and that is moving the indexes, but we're not getting really broad-based support. And we saw yesterday we had kind of a lack of volume in the rally going up. It was light, it was choppy, it was a little bit questionable all the way through the day. Now, as we approach this resistance up here, I was watching this pretty closely, and not that I was really in fear of anything, just nervous about really buying up much of anything yesterday. And if you were looking for stock trades yesterday, you probably found it a little bit difficult to find any really good quality entry signals. So as we rallied toward this breakout high resistance, and this was that all-time high breakout line right here, as we rallied toward that, we really started to, well, it was like it was being forced. And as you can see, there's nothing bearish here in this chart yet, but there is a little bit of reason for concern. Failing to hold on to this and then holding on to that uptrend right there is certainly no reason to be running for the hills or screaming the sky is falling or any Chicken Little stuff like that. But it is a little bit of a reason for concern, particularly when we see fewer and fewer companies kind of supporting the move. Now this morning we're getting a gap down open, and that's not particularly surprising based on the candle patterns that we have here. And it's not a tremendously bearish gap down open, at least at this point. But it is enough to raise some caution bells. And if we start to drift below trend lines and important support levels, say for example, break this trend line down and then drop on through this level of support, we really could see some significant selling come in to play as traders kind of start running for the doors to protect themselves over the weekend. Let's hope that doesn't occur. And I wouldn't necessarily say that in any way, shape, or form we could predict that occurring. And the reason being, because this is the last day of the quarter, we could easily see this as a gap down and a complete reversal with some window dressing as the institutions try to hold this up and dress things up to finish out the quarter. So watch that closely. We easily could see that gap down and reversal here today. So keep that in mind as you plan your day forward. Let's take a look at the SPY. SPY, a little bit better than the diamonds yesterday, able to hold on just to a little bit more of those gains, but you can see those two wicks right there certainly are a concern. They're happening right here at price resistance. Now, once again, we're holding on to this trend and we're holding on to some support levels. So nothing here blatantly bearish, but there is a little bit of reason for concern. And this morning we're gapping down, possibly even breaking that support at least at the morning open, and we'll have to kind of keep an eye, or the trend I should say, we'll have to kind of keep an eye on that to see if there's actual sustained push through or follow through by the bears pushing us down. If they are unable to sustain, then we could easily see that bounce or push right back up, that reversal back up. So just as we're cautious at market highs when we see gaps up and near market highs. Gaps down near support levels have to be watched pretty closely for that same possibility of reversal. So keep an eye on that. Let's take a look at the Qs. Now the Qs did a lot better job actually holding on and maintaining the majority of their rally yesterday. However, that pullback in the other indexes certainly left us with a little bit of caution to be thinking about. Now, the Qs have already failed this current trend, and we're trying to establish this new little trend here. It's a little bit choppy, to be sure. The fact that we broke above this little resistance area right here and held that for the end of the day, I think shows some confidence in the Qs. And it could be one of the indexes that helps us bounce back up today after kind of a bearish open this morning. So you can see this morning we're gapping down here to the low of the day yesterday. So what we need to watch for is any follow through push by the bears to sustain some kind of a move down. Then we could be into a little bit of trouble. But if we get that bounce this morning, watch for that reversal pattern. Let's take a look at IWM. IWM just basically rested yesterday, but some problems here in IWM in the fact that we broke down through this all-time, that year high breakout, and we broke this current trend. So we still have the longer term trend here in play, and so far we're just kind of camping out right here. So nothing particularly bearish here in IWM, but certainly the most bearish of the indexes at the moment. So with that, let's take a look at the VIX. Now the VIX been bouncing around down here on this really important support level, and so far that support level has continued to hold, and we've just kind of been chopping around in this level. Gap down this morning is likely going to set off a little bit of fear, and we could see that pop up. We'll have to wait and see if that can be sustained throughout the day. But keep in mind, any rally in fear, any rally in the VIX, will watch this area right here as potential resistance, and even up into here. A little bit of resistance that we can pay attention to, and if we don't shoot up above that, we should be okay. Here in the market, fear can maybe subside. Now remember, as we head into the weekend, there's always that possibility that we could just see selling to reduce risk into the weekend, and that could also maybe increase fear just a little bit, that next week could be potentially a rough week if we start breaking supports and trends. So keep an eye on that. T21, whoops. T21.22, the 4-week new high, new low ratio. As you can see, the 4-week new high, new low ratio just kind of hung out down here toward that bullish reversal zone. But you can see we still have some, plenty of room to be able to move lower, and we're going to do that this morning. But that's also one of those reasons we may be down in here in that place where we do get that bounce. So watch that closely today. If we do get that window dressing, a little bit of into quarter buying going on, watch for that potential bounce. So we certainly have some room left to go to the downside, and then we've got plenty of room to the upside. So we're in that area where we could see that bullish reversal. So watch it. I want to show you T21.08. I don't do this very often, but T21.08. Remember when I said that fewer and fewer stocks are supporting this rally, and this is the percentage of stocks above their 40-day. And as you can see, we are slipping there are fewer and fewer stocks holding on, and we're getting more and more down pressure here. And that's what I say, we're just not getting as many companies following through to sustain the rally. So let's be a little bit cautious and careful of that. I don't know that there's a reversal coming, but we certainly need to see this turn around. We don't want to see, we're getting down to the nitty gritty here on stocks holding up the market And if that continues to drop, we could see some trouble ahead. So watch that. So with that, let's take a quick look here at the economic calendar today. We do have some things that could move us around, and these numbers that coming out today aren't expected to be bearish in any way, shape, or form. So we got personal incomes and outlays here at 8:30. We've got the Chicago PMI at 9:45 and consumer sentiment. All of those are expected to show some pretty good strength this morning. So watch that. And the only other thing really notable here this morning is we have a Fed speaker coming in after the market closed today at 4:45. So don't expect that to move the market around, but it is notable for the day. On the earnings calendar, we have 15 companies reporting earnings today, none of which I would expect to be particularly market moving. Probably the most notable is MTN here today. The majority of everything else reporting would be considered penny stocks. So not many things to really move the market around today. It looks like MTN may have already reported and could be looking at a lower open this morning, possibly missing on its projections here. So watch that. So with that, everyone, I want to wish you all a great day. I want to wish you great profits. And if this is the first time you've seen these videos, if you find these videos to be helpful, please do me a favor. Click that subscribe button there on YouTube. Click that follow me button on Facebook. And always, 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 please, it helps me out a lot if you click those thumbs up buttons. And if you feel it's worthy to drop a note, please feel willing to drop a comment. I always try to answer those as quickly as possible. And also feel free to share this video with any friends and family that you might think could find it helpful. So with that, everyone, have an awesome, awesome day. Have a great weekend. And we'll talk to you all bright and early, the beginning of the fourth quarter on Monday morning. Take care, everyone.